In 2025, Tax Freedom Day has shifted to the 12th of June, marking a worrying trend for British taxpayers. This later date is attributed to rising taxes and frozen thresholds, urging individuals to explore strategies to bring their personal Tax Freedom Day closer. Tax Freedom Day, the moment when individuals in the UK start earning for themselves rather than the taxmen, has experienced a worrying shift. For 2025, it is projected that this significant day will fall on the 12th of June, 3 weeks later than the previous year's date of the 8th of June. This shift illustrates the growing tax burden faced by British households. But will this later trend continue? Historically, Tax Freedom Day has seen fluctuating dates, moving significantly later over the decades. In the 1970s, the date was considerably earlier, arriving as early as April and still falling in early May in the late 1960s. The transition to later dates began in earnest during the tenure of Labour Prime Minister Harold Wilson, peaking at the 26th of May in 1970. Under Prime Minister Margaret Thatcher, the date eventually moved back to earlier in May by the end of her time in office. The current trend has alarmed financial experts, as it indicates rising taxes and a potential strain on household finances across the country. I can certainly point to the impact of stealth taxes, such as the freeze on income tax thresholds, which has dragged many more workers into the tax bracket and others into higher tax brackets. The increase in taxpayers, which reached 37.7 million in 2024-25, has coincided with an eye-watering £301.9 billion paid in income tax, a significant 10% increase from the previous year and a staggering 37% greater since 2021-22. The implications of a later Tax Freedom Day are profound, signaling potential long-term fiscal challenges for ordinary Britons, with the forecast suggesting the situation is likely to worsen. Individuals are encouraged to take proactive measures to enhance their personal tax efficiency. By using tax-efficient vehicles, such as ISAs, individual savings accounts, individuals can shield their investments from capital gains taxes, dividend taxes, and interest taxes, potentially accelerating their personal Tax Freedom Day. Additionally, exploring pension contributions through salary sacrifice schemes can offer immediate tax benefits, allowing individuals to invest in their future while reducing their current tax burden. It is essential for people to adapt to these financial pressures by exploring options to mitigate their taxable income. Through awareness and proactive financial planning, individuals can mitigate the effects of a delayed Tax Freedom Day. Everyone needs to arm themselves with knowledge about the available tax reliefs and strategies to bring their Tax Freedom Day forward. After all, the goal is for every taxpayer to enjoy their well-deserved earnings without excessive deductions going to HMRC. Understanding the dynamics of taxational shifts is the first step towards financial empowerment, and that ensures more of your hard-earned income stays in your pocket. If anything I've written in my blog post resonates with you, and you'd like to discover more of my thoughts about Tax Freedom Day and how to reduce your tax bill overall, then do feel free to call me on 01908 77432, and let's see how I can help you.